Today we're going to be discussing the 7 steps to buying a home. So let's get started and get you from dreaming to owning. With my 22 years experience as a licensed realtor, I would consider these steps to be the most important when starting the home buying process. So let's dive in. Step 1, consider your finances. I want to break this down into 3 easy sections. First, we have your funds for purchasing. On average, you're going to want to allocate at least 3% for the total purchase amount for your down payment. For instance, for a $500,000 home purchase, plan for around $15,000 as your down payment. Additionally, you're going to want to budget another 2 to 3% of the total purchase price for your closing costs. So in total, you will want to plan for approximately $30,000 for your down payment and your closing costs. Keep in mind, down payment and closing costs will vary based on your loan type. Secondly, monthly income. Most lenders are going to want to see at least 2 years of steady income and employment for any borrowers who are applying for the home loan. Your lender will also take into account any other additional sources of income that you bring in on a monthly basis, such as spousal support, Social Security income, and rental income. Thirdly, credit score. A credit score of 620 is typically what a lender will require in order to qualify you for a home loan. Although some lenders will accept a credit score below 620, keep in mind the lower the score, the higher the interest rate, and the higher your monthly mortgage payment will be. A credit score of 700 and above is going to offer you the best interest rate and offer you the most amount of flexibility in loan terms. Now let's move on to the second step, hiring your realtor. Before you begin your house hunting, you're going to want to hire a realtor to represent you and your best interest. If you're new to the home buying process, be sure to ask your friends, family, and coworkers for their agent referrals. Trusted recommendations from people you know can help simplify the process. If relocating, look to your local realtor who can tap into their referral networks at no cost to you. Now that you have agent referrals, you're going to want to interview at least 2 or 3 of those agents. So why interview multiple agents? Well, just because these agents were a great fit for your friends or family, they may not be the best fit for your home buying goals. Given the fact that you may be working with this agent for 3 months to a year, you're probably going to want to hire someone whose communication style aligns with yours. When selecting your realtor, you're going to want to prioritize an agent who has experience in working with home buyers and who has local market knowledge of the area where you plan to buy. Once you've hired your realtor, remember, they work exclusively for you and are committed to safeguarding your best interest. Don't be surprised if they request for you to sign a buyer-broker agreement. This solidifies your commitment to work with them throughout your home buying journey. So now that you've got your finances in order and you've hired your realtor, it's time to begin the pre-approval process for your home loan. Look to your realtor for a list of their preferred lenders. Interview 2 to 3 lenders to find the best options for your needs, as lending guidelines may differ per institution. And remember, there's no cost for the initial meeting with the loan officer. Costs should only apply once you're in contract on a property and once you close escrow on that property. A credit check is optional at the first meeting, although it's highly advisable to hold off on any credit check until you select the lender you'd like to work with. In preparing for your meeting with your loan officer, they may request that you bring in a list of required documents. These documents are necessary in order for the loan officer to determine whether or not they can offer you a loan product specific for your needs. A lender's list of required documents may vary depending on your type of employment and your sources of income. After submitting your required documents, your lender will assess your debt-to-income ratio, or rather your DTI, which compares your monthly expenses to your monthly gross income. After careful review of your DTI, your credit score, and your supporting documents, your lender will inform you of your qualifying status and the best loan options for you. At this point, your lender will provide you with a written pre-approval, which includes your quoted interest rate, your loan amount, and your loan type. This written pre-approval allows for you and your realtor to begin your home search. Depending on the duration of your home search, your lender may request updated documents until you close escrow on your new home. During your home search, remember to avoid any significant purchases like a new car or opening any new lines of credit, as this can impact your loan qualification and risk you losing your loan approval. Your pre-approval is a condition to loan. Final loan approval is based on lender conditions such as your home purchase agreement, a satisfactory property appraisal, free and clear title of the property you are purchasing, and lender underwriting. All these conditions will be explained to you by your loan officer during the loan application process. Now we're on to the best part. Step number 4, your home search. The best way to begin your home search is always by compiling a list of your wants and needs with your realtor. This list not only helps your realtor to better understand what you are looking for, it also helps to keep you on track during your home searching process. House hunting can be overwhelming, but sticking to your list of wants and needs will help you avoid searching for homes that do not meet your criteria. Consider your list as a starting point and adjust as needed. Once you begin to view homes within your budget, you may realize that some of those items on your list may not even be a priority. As you've probably heard by now, it's all about location, location, location. Your new neighborhood is just as important as your new home. It's always a good idea to spend some time researching and visiting the neighborhoods within the city you are looking to call home. Look at neighborhood schools, shopping options, neighborhood amenities, and commute times if you will be traveling for work. Plan for an afternoon where you and your realtor can visit these neighborhoods together. This gives you the opportunity to compare neighborhood amenities and ask your realtor specific questions about each neighborhood. Experienced realtors have often sold a handful of homes in the neighborhoods you are considering. Let their expertise and first-hand knowledge assist you in selecting the best neighborhood for your needs. Thanks to the internet, searching for your dream home is easier than ever before. However, you'd be surprised to know that your realtor is your best and most effective asset when searching for a home. Not only does your realtor have access to the local multiple listing service database, they have also built professional relationships with their peers and often know about properties before they even come on the open market. Thus, they can help you by avoiding competition for a home. Look to those home searching services as an aid, but allow your realtor to be your trusted source for your home search. When visiting open houses without your realtor, be sure to let the open house host know that you're working with a realtor. This will let them know to contact your agent should you express any interest in that home. On to step 5, making your offer. Congrats, now you have found the perfect place to call home, but what comes next? Writing your offer, of course. This is the part of the process where your realtor will work their magic to get your offer accepted. The most challenging part of crafting your offer is what to offer a seller. The amount you decide to offer can involve a multitude of factors. These should be discussed with your realtor before your offer is submitted. It is common practice for your realtor to gather the most recent neighborhood closings as well as active and pending sales data. This allows for you and your realtor to determine a fair and reasonable offer amount. Depending on the market conditions at the time, your offer may be written for above the listed price, below the listed price, or at the listed price. Again, this is something your realtor can advise you on. Depending on the standard of practices in your marketplace, your agent may request that you or your loan officer provide a copy of your proof of funds with your offer. Your proof of funds are a total of both your down payment and your closing cost funds. This is to show the listing agent and the seller that you have the funds necessary to purchase the home. Now on to the terms of your offer. The terms of your offer will not only include the dollar amount being offered, but will include specific contractual dates and timelines where both the buyer and the seller must perform. In addition, your offer may include an earnest money deposit, or EMD for short. The EMD is a dollar amount you offer to the seller for good faith. Upon successful close of the property, your EMD will be applied towards your down payment. Because purchase agreements can vary from state to state, rely on your realtor to guide you in setting contract dates, timelines, and conditions of the offer. After submission of your offer, the seller has the option to accept, reject, or counter your offer. Should a seller reject your offer, you may have the opportunity to resubmit a new offer with terms that are more favorable to the seller. If you receive a counteroffer from the seller, this is your opportunity to renegotiate the terms of your original offer or accept the terms that the seller has given you in their counteroffer. But remember, you are not officially in contract until you have a fully executed contract. That is, a contract that is signed and accepted by both you and the seller. Now that your offer has been accepted, we are moving on to step 6, which is inspections and contingencies of your offer. Property inspections will vary on the type of property that you will be purchasing. The following are a list of common inspections you may want to consider. Physical home, pest, roof, chimney, foundation, mold, pool, and well and septic inspections. Other non-physical inspections include the ability to obtain homeowners insurance, review of seller property disclosures, property leases, and HOA documents. Keep in mind that some areas may require state, county, and/or city inspections. Your realtor can advise you on the inspections that will be best suited for your new home. Should any of your inspections come back with any items that are unsatisfactory to you, this is your opportunity to either renegotiate the terms of your contract, or you may have the opportunity to cancel the contract altogether. Now on to the contingencies of your contract. A contingency of a real estate purchase agreement allows for both buyer and seller to cancel the contract should either party not perform a specific condition of the contract. Contingencies of a contract include inspections, appraisal, loan approval, and the sale of a buyer's current property. In some cases, these contingencies may be removed from the contract. Though not advisable, some buyers may decide to omit these contingencies from their contract depending on current market conditions or demand for that property. Should you agree to remove any of these contingencies upon acceptance of your offer, you may risk the possibility of forfeiting your earnest money deposit. Always seek the advice of your trusted realtor when removing any contingency of the contract. And now we've arrived at the final step, step 7, closing on your new home. But hold off on popping that bottle of champagne, and before you move in, you're going to want to perform a final walkthrough of the property. During this final walkthrough of the property, you and your agent are going to want to confirm that the property is in the same condition as it was when you made the offer, as well as confirm any repairs completed by the seller prior to close of escrow. It's highly advisable that you and your agent perform this final walkthrough prior to signing any of your loan docs and closing on the property. Following your final walkthrough, your loan officer or your realtor will schedule your final signing of your loan document. You can anticipate your sign-off to last anywhere between 30 minutes to an hour, all depending on how many questions you have at the signing table. The final closing date and process varies from state to state, so consult with your lender or your realtor on your state's funding and closing timelines. And so the day you have been waiting for has finally arrived, closing day. Once your home loan has funded and the grant deed to your new home has been recorded, you are officially a homeowner. Congratulations on achieving the dream of home ownership. Thanks for watching. For a more detailed breakdown of these 7 steps, be sure to click the link below for my free Homebuyer's Guide, which also includes the questions to ask when interviewing a realtor. If you found this information to be helpful, please be sure to give it a thumbs up and be sure to subscribe to this channel where I'll talk all things real estate.